Welcome to another episode of Brand Called You, a video and a podcast show that brings you knowledge, experience, and wisdom from hundreds of successful individuals from around the world. We are now in season 3 of our show and have over 750 recordings for you, which you can see at www.tbcy.in. Today, it's my privilege to welcome Mr. Pradeep Kar, founder, chairman, and managing director of Microland Limited.
Thanks, Sesh. It's an honor and a privilege to be on your show, and more so because you're the host.
It's a pleasure is all mine, Pradeep. Microland specializes and guides enterprises in adopting next-gen technologies to achieve the highest possible levels of reliability, stability, and predictability. Headquartered in Bangalore, India, Microland is 32 years old, globally engaged service provider with over 4,500 digital-savvy technologists across offices and delivery centers in Asia, Australia, Europe, Middle East, and North America. A true serial entrepreneur, Pradeep founded and sold India.com to Rupert Murdoch News Corporation, a story which made headlines then. PlanetAsia.com, which was India's first internet professional service company, and Net Brahma Technologies. Pradeep was chosen by World Economic Forum as the global leader for tomorrow in the year 1999. Between 2006 to 2016, Pradeep served as non-executive director on board of UBM PLC, a leading business events organizer listed on London Stock Exchange. Pradeep served on the board of Telstra Telecommunications India from 2011 to 2021. He served as chairman of the governing council of Srishti Institute of Design and Technology. Pradeep is the founding member of Young Presidents Organization, also known as BATIO, for the Bangalore chapter. Pradeep is the former chairman of Indus Entrepreneurs Time for the Bangalore chapter. Since 2016, Pradeep is member of Provost Council of Trinity College, Dublin. And Pradeep has been, I can just go on, Pradeep has been recognized by many business publications as Star of India, Star of Asia, and the list just goes on. I will take a pause here and I'd like to welcome Pradeep. Pradeep, welcome to the show.
Thank you, Sesh. Thank you for your glowing, words which I don't deserve, but thank you. And as I said earlier, it's an honor and privilege to be on your show.
Thank you, Pradeep. Let's go back and start where it all started. Walk us through your professional journey and your learnings from it.
It's a very large statement that you said, professional journey and learning. I guess in a very small nutshell, come from a reasonably good family, originally from Kashmir. Parents relocated to Mumbai, did my engineering, did my business school. My first job was with Wipro in the early years of its IT journey. And 2.5 years with Wipro, I saw an interesting ad, which says starting India's first computer retail chain, which was then called Computer Point. And I took a bold plunge to apply for a job, and I was third employee of Computer Point. And the interesting thing of Computer Point and Wipro, both were from that standpoint, startups. So I got tremendous exposure and learning to be part of two organizations which were in the early years of its evolution. Computer Point owners also decided to set up a software company, which today a public listed company called Sonata Software. So, I was given the privilege and the opportunity to travel to the US. I relocated to San Francisco, to the Bay Area, to set up Sonata Software. This is, I'm talking 1987 to 1989. By which time, I guess, the PC revolution started, by which time the network and the local area networks opened up. And I thought it's appropriate and important to come back to India and set up Microland. So those were the early years. And I guess it's been not an easy ride. It's 32 years. We completed 32 years in August. And we are still standing and looking forward for tomorrow.
Yeah. So Pradeep, I think, like you correctly said, you come from a background which is not the entrepreneur's background. Okay. And you took that plunge, the word plunge, what you do. What was running on your mind when you made a decision to transition from the corporate world, which at that time was a very established place to be, then moving on to a startup Computer Point and then going on to setting up Microland?
I think there's two things that was in my mind. If I looked at my father, who largely served with the Tata Electric companies, and at least in my time and maybe in your time, our parents bought their first apartment close to the retirement. They took the money from the PF and used that money to buy an apartment. And to that extent, I felt that, at least I visualized a lot of things have changed. To say, I joined Wipro because at that point of time, Wipro was the first company taking engineer MBAs, and on a very simplistic basis, they were paying higher than the consumer marketing companies. So the salary was, princely sum of 2,350 rupees per month, which in those days was not bad. And the logic then was, at least in my mind, and which was probably the trigger for me to say, look, I need to do something outside the ordinary, is I visualized, I could imagine what I would earn in my entire life with that base to say, I'll get a 5%, 6% increase, and that will go on till I retire. And I just felt seeing the things around to say, I don't want to get constrained by the earning potential that I have of a 5%, 6% increase a year till I retire. I said, if I don't try this out, it's an opportunity that I would say, regret. And I said, let me try. Nothing tried, nothing gained. So I said, let me try something else. And if I succeeded, it would be nice. And I came back from the US to set up on my own. And times change. A lot of things changed post the 90s. India, during Prime Minister, during Narasimha Rao's time, liberalized. India opened up in 1991. And a series of things changed after that. And we were just lucky, right place, right time.
So I still remember 1991, that whole era of Microland was the name which was associated and was known from the hardware point of view. You talk about any event anywhere and who is your major partner in providing you the equipment, it was Microland. Now, then from there on, you made a very big shift. From having mastered that and conquered that space, you transitioned from there to services. Now, tell us what happened. What was it? Did you see that coming, or was it some other reasons? So what led to this whole transition? How did that thought came by? And today Microland is phenomenal, known as nobody knows about the past history of Microland. Nobody associates to the computer days when you were all about hardware company, and it's completely out toward a services company.
Yeah, I would say it's situational. First, when it came back, so as I mentioned to you, I was the third employee to set up computer retail change for the Indian organic Mr. B.M. Gears group called Computer Point. And that was my first learning of bringing my marketing, education, and interests with technology. When I went into the US, Computer Point was modeled in those days of a chain of stores in the US called Computer Land. When I went to the US, there was an early start of the networking revolution with the arrival of novel netware.
Correct.
And a new chain of resellers or retail chains started up called Business Land, which focused on sending business solutions to enterprises. So I just felt that my experience of setting up Computer Point would be valuable for me to come back to India and not compete with Computer Point, which is largely into computer retail, but focus on the enterprise customer and build networks. Came back in 89, started Microland in 89. 91, the Indian economy opened up. And that's when I think there was a trigger that happened to say, look, the license Raj that the earlier generation had, in our parlance was, if I sign up all the major technology brands to represent them in India, I will have an advantage. So in a very short span of time, went aggressive and signed up with Compaq. And I still remember Compaq at that point of time was $4.4 billion a company. There was a new change of leadership coming from Eckhart Pfeiffer. So we signed up with Compaq. In 89, we signed up with Novell. We grew fairly rapidly, very rapidly in those periods of time. And therefore, the logic was, if any company wants to buy or implement a technology solution, the company will need a server, which is Compaq. The company will need a netware software, which was Novell. The company will need a router or a switch, which was Cisco and Synoptics. So we had partnered with all those companies when distribution was single, was a single distributor. There was no multi-distributor concept. Right? The 96 triggered 2-3 things. First was, it was the arrival of Netscape. So in the early eras, if I sell you a Compaq laptop for 10,000 rupees, you have very little opportunity to check what is the real price, where it's available, can you buy it from elsewhere. So you were practically dependent on companies like us. So the early focus we had was in IT services companies, which were encouraged by the government to focus on software exports. And they could buy international technology brands. Remember, in 89, the duty structure was 255%. So they could buy these technologies. So we would get them to, we show them the demo, like they will buy it, they place the order directly, and we'll get an overriding commission to install, maintain, and support it. By 1996, the network revolution was quite apparent. 3 things happened. One, arrival of Netscape, which was the first browser. And what Netscape did at that point of time, which was the early years of the internet revolution, was democratized information. So if you want to buy an equipment, you can go to the net and find out where it's available, what's the price, where can I get it, etc., etc. So suddenly the information arbitrage that we had from the buyer to seller got disintermediated with the arrival of the browser called Netscape. Second is that companies got successful, the brands got successful globally. So they now wanted multi-distribution partners. And that's when we realized Compaq had several partners, Cisco had several partners, and therefore, new partners obviously had a incentive to sell and prove their value. So they were willing to discount and drop prices to get market share.
Right.
So there was some element of commoditization due to the information arbitrage. There was some element of commoditization and dropping of prices due to competitive landscape. The third thing that happened was warranties on hardware became 3 years. So what happens in the previous era, every year we'd get 12% annual maintenance charges. So there was a steady stream of income. Now it's easy to say, you will get a warranty for 3 years, which means the customer does not pay. But the reality is hardware and software fail. So we had to now provide services to customers without getting paid for 3 years. Right? And therefore, in my mind, I just said that the internet will commoditize the IT industry. And if we continue the business, it would be a very much a low margin business with high cash investments.
Right.
So took a very bold risk in March 98. We were that time, I remember, $161 million or $63 million, 181 crores. We took a very bold call to say we must exit the hardware business. And we moved into Internet 1.0, which was India.com, PlanetAsia.com, IT Space, Media to India, etc., etc. It was a difficult decision. But had we not made the decision, we would not have survived. And if you look at that point of time, all the distributors for Compaq don't exist today.
Yeah.
All those companies that were selling Compaq today don't exist because they became so successful in the hardware, they didn't realize at 3%, 4% margins, you can't sustain a business.
Right.
And we moved to the internet economy.
So Pradeep, at that time, when you made briefly a mention about India.com. India.com, I so vividly remember that made the front page news with the way it was built, the way it was positioned, all the TV channels were talking about it, and then you sold that to Robert Pedron. Tell us, what was that thought? What was you obviously where you had made a what I should say, you're a trailblazer there.
I would say, if you look at in the 98 period, etc., there were two companies who were looking at going to a public offering. One is Rediff, which went to NASDAQ. Second was Satyam Infoway, which was Safi Online.
Right.
So when we started India.com, we realized we are going to compete with these two established players who were looking at a 50 million broad raising in capital markets. And I decided to say, if I have to play this game, I must have adequate capital to, to compete against them. Part is youth. I still remember it was, if I think about things that I've done, I would say I was so immature, but it worked out, right? I remember, I was sitting, so we were hiring for India.com. And now you must understand the internet at that point of time. The internet was structured for the MTV generation, which was 15 to 34, right? It was not structured for consumer. It was not structured for younger. It was not structured for elders. It was the MTV generation, which is structured 15 to 34. Remember, there's no Wi-Fi, there's no tablet, it's a dial-up connection, etc., right? It's very different because the ecosystem changed. I remember, the CFO News Corp called me up. I was at the Belvedere in Oberoi. That's where I used to sit and hire all the people. And he said, I want to meet you. I said, look, I don't have time to meet you. CFO News Corp. His name is Gary Waldroth. So I said, look, and he was staying at the Leela Kempinski in Mumbai. I said, look, I don't have the time. Right? Maybe you should come and see me. So I sent a car to him, pick him up, he comes there. And he says, look, we want to look at investing in your company. The trigger for that was America Online acquired Time Warner in the US, and suddenly traditional publishing houses, media broadcasting houses, just thought that the market has changed, and Star decided to come towards India and Asia to say, if we don't capture this market, we may not, we may lose an opportunity. So I was simple. I said, give me $50 million, take 33% of the company. That's all. That was the conversation. No business plan, no projections, nothing. We shook hands at that conversation. So that was the trigger with the CFO. And then he said, look, but Mr. Rupert Murdoch would like to come and meet you. I said, sure. I remember it was March 11, 2001. We went live April 16, 2001. Rupert Murdoch comes to Bangalore. It's a Sunday, March 11, 2001. He's staying at the West End. So I go to meet him on Sunday and I said, Mr. Murdoch, we have three things in common. He said, what? I said, one, we share the birthday on the same day. I said, two, we both work on Sundays. And three, we are here, both want to make this deal happen. We shook hands, and a single check, which is probably the largest check ever in the history of private equity at that era, 243 crores or $50 million we raised before the company was formed. Right? So it's a period of time and some ignorance, some youth that happened, and that's how the money came. And then we started.
So you make a mention of some ignorance, some youth. What was the ignorance part which was here? I think this was a fabulous journey. And what was this you're talking about? What are you referring to?
I would say it was raw ambition without understanding the consequences. Okay. Right? What would that mean? Had he said no, what could have happened? No, it was many of those things.
Right.
I still remember the conversation. You say, what does it take to put a star ahead of India?
Right.
And I said, ain't going to happen. I want to make this a $1 billion company. From that standpoint. And, you're talking of the India.com launch ad. Never in the history of, if you see the ad carefully, right? The Times Group had their own broad-based portal called India Times. Here's we go to Times of India, and there are different businesses to say, look, we want, and this was the genius of the advertising agency to say, we want to take the front page, the front left, back page, and back left, and the center spread, the entire page as an ad for India.com's launch. And if you look at it carefully, it says in the center, it says breaking 163 years of perfect tradition. Catch the headlines on the last page today. I remember we got up at 5 in the morning to go buy the newspaper. It was Sunday Times, right? And when the paper is folded 4 times, it was so tinily written in the center. The newspaper distributor said, "Pata nahi, aaj paper chap nahi gaya," on the front page. And when you take the page, it says catch the headlines. When you turn the page to the last page, it says India changed its name.
Right.
Introducing India.com. There's several trivias that happened. And it was simple, if you know how advertising space gets sold, it gets sold normally by per column centimeter.
Yes.
Because we had raised so much money, the offer was simple. Here's $1 million. Are you willing to do a deal?
Right.
And that's it.
So,
it cost $1 million to get that ad out. But we had the money, so we didn't think about the money. Think about it. $1 million in 2001 to get one ad for one day.
Right.
That's what it costs.
So, Pradeep, while this all looks great, but tell me, there's never, entrepreneur's journey is never ever just all the bed of roses. There are instances where you face challenges, you feel frustration, you experience failures. Tell us about your failures and what impact it had on you and what were your learnings from it.
2 or 3 things. One, we were the early movers of Internet 1.0. So every 4 months, we were creating a company. Right? So, we have, if you look at the early investors in India.com and Planet Asia was Vinod Khosla, John Scully, CEO of Apple, Rajat Gupta, CEO of McKinsey. You look at, it's there on a journey slide. Did not expect the internet, boom to drop so easily, quickly. 2001, suddenly shit hit the fan and said, the bust of the internet economy. And that was a very difficult decision because one, we had money in the bank. So we had enough capital. We had raised $77 million. And what do you do when suddenly you come in the morning, you're unable to predict the future. Right? And that's when I took a bold call to, at various points of time, investors were talking to us, so can we buy this company? I took a very bold call to sell 3 companies in 2001. And my essence was very simple. One of them was India.com to News Corp. So my essence at that point was very simple to say, let me park this because I had the confidence that I will do something else. Now, if I think about it, had I stayed down the path, right, maybe we would have morphed ourselves and done something else, etc., right? Clearly, we would have done that. But if I look at the, some other companies like Radius, still listed on NASDAQ, has not been able to capitalize the shift that has happened post 2001. That was a difficult period because one, sold those businesses in 2002, back to square one. What do I do? But if I think about it, what I did sensibly, which was the best thing that I did, if I look at it in my life, was one, I had the capital since I made some money. Second, I said, let me get my basics in place. So I bought my primary house, I bought my summer house, etc., etc. I spent the 1.5 years just getting my basic assets and securities into place. Had I not done that, one, it would cost me 5,000 times more today. Two, and these properties would not have been available today. So I got my basics in place at that point, but that was a difficult period of time. What do I do? So when I introspected into what had changed between 98 to 2001 or 2002, I said, let me just step back and say, what has changed in the industry? there were 3-4 significant shifts that happened. One, the Y2K created the software industry.
Right.
Because everyone thought, what will happen after Y2K? No one could visualize how the software industry will evolve. The telecom deregulation, created the BPO industry, right, with all the gem packs. The third thing is companies like Infosys, etc., listed in NASDAQ, gave credibility for Indian companies for services. And the fourth interesting thing that was happening was that rupee was devaluing approximately 6-7% a year, and it was tax exempt.
Right.
So what one thought to say, the business model that one has to do going forward has to be sell in dollars, earn in dollars, incur cost in rupees. I said, I need to get into that business because that's the economical value proposition that point of time. Think about it today. All unicorns of today, 90% cater to the domestic market today, not to the international market.
Absolutely.
All IT services today cater to the international market.
Right.
And when I looked at that, I said, what do I know best? I know networks. I know networking because that's what we started with Cisco, with Novell, with Compaq, etc. And the YPO, the software industry had evolved. The BPO industry was evolving. I said, I don't want to be a follower. Let me try and see if I can build a model for managing networks remotely. I said, it's only a matter of time. So decided to focus on what is called remote infrastructure management services, which is managing networks for global customers out of India.
Right.
Because at that point of time, all the software companies, all the major boys were focused on the software part of the business, which are much larger, much more lucrative. But I said, this is where we know best, we'll differentiate, we'll do that. First, from 2002 to 2010 was very difficult time. It's easier said than done. We can manage remotely because this is real time, right? If a network goes down, it goes down. So went through very difficult periods of time, from cash standpoint, from business standpoint, etc., etc. Fortunately, I'm blessed that the Microland team stayed together. My current team is still an average of 20 years with Microland. Wow. So the team stayed together. We went through the same pain. And looking forward now, while we're 32 years as a company, we are around 19 years in the business that we are in currently.
Right.
The team stayed together. We stayed focused. We stayed optimistic. And thank God we have transitioned. But it was a difficult period. I mean, no questions about that. You are coming to the office. You have to show positivism. You have to show optimism in your face, because otherwise the employees will start getting concerned. We're just lucky. Went through a very difficult period, but that's life, right? Unless you went through, you won't enjoy it as much.
Absolutely, absolutely. I can relate to every word what you're saying. So, Pradeep, looking back now, 32 years and 19 years of this services space, how does Pradeep Kar feel today? And knowing Pradeep, he's not the guy. There is always a little buzz in his head. So, what's the next buzz you're working on? So, my question is in twofold: how do you feel it? And and what is your next move? What are you working on?
First, I'm saying, if I look at myself where I am today, and I will leave aside, one thing that I've also done in the course of my business, course of the business experience, I always told myself that to say I need to balance life. I always found time for family. I always time for friends. I always want to play golf. I said I'm not going to compromise on basics. So I don't have a feeling that I gave too much on one platform. When I look at Microland today, I would say I'm pleased but not satisfied. Right? There's a lot of things going on. We are the largest specialist provider of networks. We manage networks for one of the top companies in the world in 174 countries. We are rated by Gartner as the leader in network services across all telecom providers and all Tier 1 providers. Right? So I would say there's a lot more to happen. Extremely optimistic of the business that we are focused on. And you will see in the next 2 years, some unfolding of the value of Microland in the times to come.
Fantastic.
Lots to do. Journey is incomplete.
No, no, knowing you, I will, had you said anything otherwise, I would have had possibly just smiled and kept quiet. But true to you, I think you just said, I think it'll be interesting to see what years ahead are. So I have a question to ask you, which I asked all my guests. What is it? What is your message for the generation which is coming in? You know, India is growing. Urbanization rate is almost 20% year on year. The C class, D class cities are just exploding. A lot of people are becoming ambitious and they aspire to be part of something very meaningful and engaging, and they want to be at the big platform. What is your message to them? What is it, what is it when you look at as an Indian entrepreneur who's had a great story to tell? What do you tell them? What is it you look up from them?
First, I would say I admire all of them. Because what has changed now, the aspiration of the youth, the imagination of the new gen entrepreneurs, their ability to execute, right? And for the first time, the market that they're catering to is the market where they have been born and they've grown. So they understand the nuances of the market. Our generation catered to creating value for a market segment that we were not familiar with.
Right.
Now, everyone who's creating value is creating value for the domestic market, not for the international market, right? With 2-3% exceptions, right? So the only element I would say is that if I have only one element where I would have done, if I was younger and playing the same game today, the difference that has happened between our generation and this generation, I'm not saying there's right or wrong, right? I'm saying, I won't say, we were more focused on cash flow. I'm not saying that. I think ownership. When you raise so much capital, your final outcome will have to be a trade sale or an IPO where you will not be a dominant owner. Whereas if you look at the IT services and the other companies of those eras, we are dominant owners of the businesses. We did not raise, I would say, enormous capital at diluting the ownership. So the current entrepreneur today, because of the nature of the game they have to play, is high capital. Every day you see raise 200, 300 million, 400 million. If you raise $1 billion, your market cap has to be more than $1 billion. It can't be less than $1 billion, right?
Right.
So they are, I would say, not all, but some of them, unfortunately, will be forced to sell. And their outcome is, I'll make this money, I'll make my great money, and I'll sell my business.
Right.
That's how they earn wealth. There is merit to also think. I'm not saying that there's no right or wrong. There's merit to also think to say, how do I build an institution that will survive a generation?
Right.
That will create value over 100 years, not 10 years or 15 years. And that's what, a Wipro has done of 75 years. That's what an Infosys is doing of, 40 years.
Right.
If you look at those companies, they looked at long term. Again, there's no right or wrong. Situations were different. Opportunities were different. Capital availability was different. Ecosystem of support to entrepreneurs were different.
Right.
So I would say clearly, the market is huge, but think of an institution that you build, that in your mind, you have to conceive, what does it take for it to survive 100 years? Start not from an idea standpoint, from ownership standpoint.
Very, very well said, Pradeep. The time when we were all growing up, this is, we're running out of time. So my last question to you, when we were all growing up, we all had role models. We all looked up to some people who were the reference points, and we built our narratives around that. Does Pradeep Kar today, at the place where he is, he's a role model himself, but does a role model like Pradeep Kar have a role model?
I would say not in entirety, but I had several role models that I tried to learn from. Absolutely. There's not one single role model because, honestly, clearly, one of my father, which is broadly, I remember, I went to a very affluent school. It's a small inflection point. I used to stay in Chembur in Mumbai, and my dad put me into a school called Cathedral and John Convent. A very affluent school, right?
Yes.
And why did he put me into that school? Because all his bosses in Tatas,
Yes,
their kids went to that school. But he gave me one piece of advice which I will never forget. And he told me, if you want to maintain friends with the people who are in your class, you have to work 5 times harder to be in their league, because to a large extent friendship is amongst equals. So you have to work very hard to be there if you want to retain a friendship with the guys in your class. I never forgot that. So purely from a dad's standpoint, grounded, hard work. Right?
Brilliant.
Steve Jobs, innovation, typography, consumer marketing, design. Right. So in various points of time,
Different people.
I looked at different elements. So I read a lot of biographies and journeys. I don't read fiction, but that's what I enjoy.
Pradeep, we can just go on and on. I think it's complete injustice to try to cover in 30 minutes your journey. I'm sure we will come back again and talk to you. But for now, thank you very much for taking time out and talking to us. And we look forward to staying connected. Thank you.
Thank you, Sesh. Thank you. And thank you for the privilege and honor to be in your show. And clearly wishing you and the brand called you great success.
Thank you.
Stay safe, stay blessed.
Thank you, sir. Thank you.
Thank you for listening to the Brand Called You videocast and podcast, a platform that brings you knowledge, experience, and wisdom of hundreds of successful individuals from around the world. Do visit our website www.tbcy.in to watch and listen to the stories of many more individuals. You can also follow us on YouTube, Facebook, Instagram, and Twitter. Just search for the Brand Called You.